Congress is creating a huge mess with the debt ceiling. People think that this is just a thing they can ignore because they're bored with it. They know that Congress has created a lot of debt, and they're like, they'll figure it out. Well, the truth is, this time around, I don't think that there is a meeting of the minds, because there just are too many differences of opinion. Republicans don't want any more spending. They want big cuts in spending. They want to repeal a lot of the stuff that was passed in the last few years in exchange for raising the debt ceiling. The Democrats have said nope, they're not going to do that, and they say there's going to be default if they don't get their way. Anyway, the best thing to keep in mind from your perspective is that there's a huge gap between the opinions, and I don't think there's going to be any compromise this time around. So I think that means that the stock market may be the one that kind of throws a tantrum, goes down pretty dramatically. And for people who have more of a longer term view, they may indeed get interesting opportunities to buy things at a relatively cheap price that they normally wouldn't buy. I'm not saying to go crazy or go on margin or anything crazy. I'm just saying there might be unique moments in time where you will be able to buy where normally you wouldn't. So this is one of those interesting cases. Now, I don't think the government is actually going to default or anything like that, but here's the thing: for professional money managers and the algorithms, they may at least make people think that they have to worry about that, even though it's not a realistic thing to worry about. But just having it out there tends to cause people to worry a bit, and there actually are a number of people who are buying insurance contracts just in case the government does quote-unquote default. I'm not exactly sure what that would entail, but there are major contracts for that, and they will make a lot of money if the government does go default. Of course, not sure where they will cast their checks if everything falls apart. But other than that, I think that this is definitely a cautious time period where you need to be very concerned about this, not because you want the government to get more debt, but just don't buy too much stock or ETFs in this moment, or cryptocurrencies, because there may become one of those waterfall moments when there's really clear, when the market realizes, hey, they're not going to agree to anything, and so we need to reprice that in. That's when you get these dramatic prices that go down. And before that moment, you may think the market doesn't even care about this, because it just will look like everything is working just normally without any problems. But then, just when you think everything is back to normal, it will have a decline. So don't get suckered in and get fooled thinking that there's an agreement, if there is an agreement, or that the market doesn't care. The market does indeed care about this.
If it's anything like it has done in the past, it's going to look like the market does not give one care at all about the debt ceiling. The market might just keep going up, and everyone's going to say, well, it doesn't look like the market cares. And then all of a sudden you get close to the maybe a month out from the actual debt ceiling limit being reached, then it's just going to collapse. I think that's just my view. I wouldn't necessarily act on that, but I think that that's what happened in the past, and it's very likely that's going to happen in the future too. So I think don't get caught holding the bag on that, because it's going to be very scary for quite a while until they reach a deal.
Okay. Well, that's it. I'm saving you a lot of money. If there is a crash, you'll thank me, and maybe you can buy me a coffee. So click like, subscribe, and I'll see you in the next video.